G'day guys, Nick here from the Wellington Squirrel team with this week's latest interest rate update. We've seen a lot of the banks creeping up in all their fixed term rates over the last couple of weeks. And it's a bit interesting because we haven't seen any OCR movements, of course, and the swap rates have largely remained the same. They're all in unison around interest rate increases coming in July, but I think that may be a bit late. As a result, I thought we'd take a look at each bank's current economic reports to see what they're forecasting out. First up, we've got ASB. They're seeing a full 1% increase this year from the OCR, which is going to directly translate into higher fixed rate costs for us. Westpac is forecasting out to the end of 2027. They're seeing 6 increases all up, which will probably translate to about 1.5% increase on the OCR. For ANZ, I didn't go into their interest rate predictions, but did note that they saw a different property value trend. Most of the banks are predicting a 2% increase across the board. However, ANZ have said it's going to be a 2% decrease. They're putting this down to the current state of the economy, inflation, and obviously interest rates. Note that these property values are nationally based, so your mileage may vary depending on where you're located. ANZ's seeing inflation coming up to 4.4% in the second quarter of 2026. Well, guess what? We're here now. My gut suggests it's going to stick around for a lot longer, unfortunately, so we're going to have some challenging times ahead. It seems like the Reserve Bank is waiting till the last minute to try to stop that speeding train. It really is a balancing act for the Reserve Bank. They'll be trying to avoid stagflation along with a recession. My gut says we'll move late and pay the price. House prices still favour the first home buyers, but the investors are doing a little bit tougher. Until next time.